Hello, I want to go over the consolidation of financial information starting here with the second chapter. And what I wanted to go over specifically is why do companies combine? What happens? What is the motive to combine? And some of the main ideas is, vertical integration, we have cost savings, entering new markets, economies of scale, more attractive financing opportunities, diversification of business risk, business expansion. Looking at some of the recent acquisitions, we have some in the energy world, Microsoft acquiring Skype, Facebook acquiring Instagram, some of these things, and just seeing like how much that actually was. Now, what is a business combination? What is a business combination? It's basically when two entities change their legal form and they become one. And there's several ways of doing that. We have statutory mergers through an asset acquisitions, and this says acquires assets and then often the liabilities, and then dissolves and goes out of business. So there's statutory merger, and then mostly what happens is acquisition of more than 50% of the voting stock, in which case they acquire the stock then the stock is recorded as an investment, and they have control decision of the acquired company. So in statutory merger, there's statutory merger or where the company gets dissolved, or there's just an acquisition of the stock where they keep the subsidiary company. So in one there is dissolution, and in the other one there isn't dissolution. So that will show us kind of what happens. So what is a consolidation of financial information? This is when the parent's financial data and the subsidiary's financial data just gets brought together. And they have to report the financial position, results of operation, and the cash flows of the company combined. And we have to eliminate reciprocal accounts and inter-entity transactions are adjusted to eliminate it. And we prepare a single set of consolidated financial statements. Now, if the solution occurs, like say they buy a company, they dissolve it, they just keep their assets, all appropriate account balances are physically consolidated in the financial records of the survivor. If separate incorporation is involved, only the financial statements, information on work papers, not actual records, is consolidated. So we'll go over that, whether dissolution or not. If there's dissolution, permanent consolidation occurs once on the combination date. If separate incorporation is maintained, consolidation process carried out on regular intervals whenever financial statements are to be prepared. So it basically happens every year that they have to reconsolidate, as opposed to with dissolution, actually just happens once on the combination date, and that's it. So the acquisition method for looking at how a company actually gets combined, actually you just have to see what is the fair value of the company, how much are they paying to acquire a company, and were they paying fair value for it. I'm going to look a little bit first at what is fair value, but essentially fair value mostly we look at as the market approach. It's like, what would somebody else pay for this company? What would somebody value this company at? If the consideration, whatever the company is paying for the assets of another company, is more than the fair value of the assets acquired, the difference is attributed to goodwill. So goodwill is just like if the acquirer is paying more than fair value, then we're talking about goodwill. So I want to talk about an example here of assume big net company owns internet communications equipment and other business software applications. It seeks to expand its operations and plans to acquire Smallport. Smallport net assets have a book value of $600,000 and a fair value of $2.55 million. So, how much are they paying? So we're going to see how much are they paying for it. So assuming that we're looking at this company, we're seeing, okay, the book value is $600,000 here. the book value is 600,000, fair value is 2.55, right? So we want to see BigNet is going to acquire this company, and we're going to put the journal entries based on that. So if we have here, for example, we're just consolidating them, and say in this situation they're paying exactly the fair value. Consideration transfer is equal to the net assets identified net asset fair values. So in this case, we just transfer over small port company into BigNet company. So we just debit. Notice that we're debiting all the items here. We're bringing them over exactly as they are as fair value, and we're eliminating the stock, the equity, and the liabilities of the underlying company. Right? So consideration transfer exceeds net asset identifies fair value. So if consideration transfer exceeds, notice that we're crediting cash, and then we're issuing some stock as well to pay for this stuff. And the balancing item is 450. In other words, between what we paid in cash, right, and the shares issued to pay for the rest of it, we're seeing that we're overpaying by 450,000. So that ends up being as goodwill because we overpaid over fair value. If we underpaid, and notice that the cash amount we spent now is less, it was just equity that we paid here, and we have a gain on bargain purchase because we're paying less, so we actually are recording gain on bargain purchase of this situation. So this is the whole idea of recording goodwill, recording gain on bargain purchase, which is I see as negative goodwill. It's like, oh, you underpaid, so you actually got a bargain, so you got to record that. It was basically a contra to goodwill, and this is the idea. This is where we're going next. Related cost of business acquisition. Now we have costs that we need to be cognizant of, and primarily direct cost of acquisition. Attorneys, appraisers, accountants are not part of the fair value received and are expense. So this is just an expense. You paid an accountant or a banker for a valuation and audit, you just expense it. Cost to register and issue securities related to the acquisition reduce the fair value of the stock issued. So if you issue the security, whatever you got for it, the cost to register actually reduces that amount that was issued.